Wake up tomorrow morning. Check your phone. You have a notification from your bank. Not a normal. Your balance reads $400 billion. Not Elon Musk money, not Bezos money. This is different. This is Mansa Musa money, adjusted, calculated, dropped into your account in cold, hard 2026 dollars. You laugh. You think it's a glitch. It isn't. Because somewhere in the 14th century, a king in West Africa controlled so much gold that economists still can't agree on how rich he actually was. Some estimates put him at $400 billion. Others say that number is too small to even describe him. Today we're going to find out what happens if a man like that, the richest human being who ever lived, wakes up in the modern world. What would he buy? What would he break? And what would the world do to stop him? Because the last time someone this rich entered a market unprepared for him, he didn't just spend money, he ended an economy. Let's call him the king. Day one, he doesn't buy a company. He doesn't buy an island. He does what rich men have always done first. He tests the water. He buys gold. 300 tons of it quietly through a private bank in Zurich. Here's the problem. Global gold trading desks only move about 4,000 tons a year, worldwide, across every central bank, every hedge fund, every jeweler on Earth. The king just asked to buy 7% of an entire year's global supply in one transaction. The price of gold doesn't move. It jumps, up 9% in 18 minutes. Traders look at their screens. Nobody knows who bought it. The order came through 4 shell entities and a sovereign wealth fund nobody's heard of. Then, something strange happened. Central banks started buying too. Because if someone out there has enough capital to single-handedly move the entire gold market, central banks don't want to be the ones left holding paper currency when he moves again. The king hasn't even introduced himself yet, and he's already rewritten the price of money itself. By week 3, the king gets bored of gold. Gold is for people who think small. He wants land. Not a mansion, not a ranch. He wants to buy Manhattan, not figuratively. Literally every commercial property on the island, one by one, through 600 anonymous companies. Manhattan's entire commercial real estate market is worth roughly $172 billion. The king has $400 billion. He could buy all of Manhattan and still have $228 billion left over. More than the GDP of New Zealand. But here's where it gets strange. The moment word leaks that one buyer is acquiring property across the entire borough, something happens that nobody predicted. Rent doesn't go up. It goes parabolic. Landlords who weren't even selling raise their asking prices, betting. The king will eventually have to buy them too. Speculators flood in behind him, buying anything adjacent to his purchases, assuming his money is a signal of value. Within 4 months, average Manhattan rent doubles. Teachers get evicted. Restaurants close. A neighborhood that took 200 years to build gets gutted in 16 weeks. The king didn't destroy Manhattan on purpose. He destroyed it by existing in the market. This is the part nobody tells you about extreme wealth. You don't have to spend money to break an economy. You just have to be capable of spending it. Now, the world starts paying attention. Financial news anchors start calling him the $1 trillion ghost because nobody can verify his identity, only his transactions. He starts buying companies. Not just any companies, companies that produce things countries can't live without. A lithium mine in Chile, a semiconductor fab in Taiwan, a shipping conglomerate that controls 9% of global cargo routes. Here's the number that should terrify you. The entire global semiconductor industry is valued around $700 billion. The king could buy half of it outright and still have enough left to buy the New York Stock Exchange's entire daily trading volume twice over. But there was a problem. Governments don't like it when one man can quietly control the supply chains that feed their militaries, their hospitals, their power grids. 3 intelligence agencies opened files on him in the same week. Not because he broke a law, because he didn't have to. Power doesn't need permission once it's large enough. This is the moment economists start using a word they usually save for nation-states: systemic risk. The king isn't a person investing anymore. He's a single point of failure for the global economy. Here's where it turns from a thought experiment into a warning. The king decides to do something almost nobody with this kind of wealth has ever dared. He moves to liquidate. Not because he needs cash, because he wants to see what happens if he tries to convert a meaningful fraction of his empire back into currency at once. He starts selling $40 billion in equities, $30 billion in real estate holdings, $20 billion in commodities. And the markets do something that should not surprise you, but does. They panic before he even finishes selling. Algorithms detect the unusual volume. High-frequency trading bots, which execute 50% of all US stock trades, start mirroring the sell-off in milliseconds, not because they understand why he's selling, just because someone large is selling. The S&P drops 6% in a single session. Pension funds covering 40 million retirees lose value overnight. What happened next shocked everyone. The Federal Reserve, the single most powerful financial institution on the planet, has to issue a statement. Not about the king by name. They can't. Nobody officially knows who he is, but they issue emergency liquidity guidance, the same kind used during the 2008 crash and the 2020 pandemic. One man, moving money that was, just decades ago, considered ancient history money, the wealth of a 14th century king, just forced the most powerful central bank on earth into a defensive posture. This is the hidden truth historians don't say out loud. Mansa Musa didn't just have wealth. When he traveled through Cairo and Mecca in 1324, distributing gold to the poor along his route, he single-handedly crashed the value of gold in the region for over a decade. He did that with camels and bags of dust. Now imagine him with Bloomberg terminals. Here's the part of the story that changes everything you think you know about wealth. We've been treating $400 billion like it's just a bigger number. It isn't. There's a threshold, economists call it the liquidity ceiling, where wealth stops behaving like money and starts behaving like gravity. Below the ceiling, money flows into markets and gets absorbed. Above the ceiling, money doesn't get absorbed. It bends everything around it. Every market the king touches doesn't just receive his money, it reorganizes itself around the possibility of receiving it. Real estate prices rise in anticipation. Companies restructure boards in anticipation. Governments draft legislation in anticipation. He doesn't have to act. His existence is the action. This is why, historically, nobody has ever been allowed to stay this wealthy for long. Empires confiscate, revolutions erupt, inflation erases, wars redistribute. There is no recorded case in human history of extreme, concentrated wealth surviving for more than a few generations, without society forcibly correcting it. Not because people are envious, because markets cannot function with a black hole in them. And there's an even darker layer underneath this one. The king's wealth, scaled to today, would represent roughly 0.4% of total global GDP held by a single individual. It sounds small, but the most dangerous thing about him isn't the percentage. It's that everyone else's behavior changes because of him. Landlords, traders, central banks, governments, even though 99.6% of the world's wealth has nothing to do with him at all. Concentrated wealth doesn't need to touch you, to control you. It only needs to exist where you can see it. So what really happens if the richest man in history wakes up today? He doesn't conquer the world with armies like he might have in 1324. He doesn't need to. In the modern world, capital is the army. Liquidity is the empire. And the simple knowledge that someone, somewhere, holds enough wealth to move a market is enough to make that market move, without him lifting a finger. Mansa Musa's true legacy was never the gold. It was proof of a law that still governs the entire global economy, 700 years later. Wealth, past a certain size, stops being a reward and becomes a force of nature. It doesn't ask permission. It doesn't wait for consent. It reshapes the world simply by occupying space within it. And maybe that's the most unsettling truth in all of economics. We've spent centuries asking how someone could become impossibly rich. We rarely ask the more dangerous question, what happens to everyone else the moment they do?